All right, guys, so time for a midday market recap. Today is day 42 of the $100,000 challenge, and I'm finishing the day up $5,689.79. For those of you watching on Facebook Live, I'll show you my P&L there, 560, $5,689.79. Three stocks I traded today, two winners and one loser. So overall, not a bad day. I actually thought today had the potential maybe to be a $10,000 day, which would have been awesome. And I've got my sights set on breaking that $100,000 mark. So tomorrow my account will open right around $86,000, which means I'm only about $14,000 away from hitting my goal. And of course, this is the account that I started on January 1st with $583. Now, I was using leverage. I was being aggressive and absolutely taking a lot of risk to make these types of gains. I mean, you can't take $500 and turn it into 100 grand without taking risk. But every risk I took was calculated. So I would be really aggressive on what I thought were A quality setups, putting basically my entire account, including buying power, into those trades, and doing that, repeatedly, day in, day out for 42 days has gotten me to where I'm at today. So this is definitely a nice big green day. I think this is actually the biggest green day I've had since, let's see, February 22nd when I made $8,000. So, the biggest green day in over a week, close to 2 weeks, it's been kind of slow. I kind of went into a little bit of a slump, if you will, where I had a couple of red days where I lost about $4,000, a couple of green days that I made back that 4,000, but was only back to break even, and then I had 2 more days of break even. So it's kind of like dipping down, back up, kind of flatlining, and now starting to open up again a little bit, which is awesome. And I'm hoping that we have some strong momentum this week that carries me up to the $100,000 mark. My goal, of course, is to get there by the end of the month. So I've got 4 weeks essentially. 4 more weeks to do it, which is $5,000 a week. But here we go. I hit my weekly goal in one day, one morning. So, this shows you that if we have good setups, I can rack up the profits pretty quickly. But if we have a week of just choppy markets, no good quality opportunities, it's going to be really slow going. I just have to remind myself not to force it. I'll take what the market is willing to give me, and if it ends up being slow the way it was the last few days until today, then I'll deal with it. All right, so let's look at the trades I took today. CNCE, NOVN, and SPU. Now, if we look at our relative volume leaders scanner, let's see, I'm surprised CNCE isn't showing on here. It has ridiculously high relative volume. There must be a reason, let's see, why it's getting filtered off of this scanner. Yeah, because it's not even on here. So I don't know, something's obviously not quite right with this scanner today. But despite that, NOVN is on here as well with 5.62 times relative volume, and SPU, where is that? That one doesn't happen to be on here. So in any case, we'll go over the trades from today. So NOVN and SPU were both on my watch list this morning. So SPU, and I'm just going to go ahead and ban this one guy. Hey, Mike, can you do me a favor and just clean up chat after him? It's not uncommon when we run a free chat day that we get a couple people that don't want to follow the rules. So today, as you guys know, was a free chat day. We had over 3,000 traders come through our doors today, which is obviously pretty ridiculous. It's a lot of traders. And inevitably, there's going to be one or two bad apples in the bunch. I mean, it's just a matter of the numbers that it's going to be that way. So, a little bit annoying, but for the 98% of you that were on good behavior and enjoyed the room, we, of course, are happy to do these days, and we'll continue to do them. So, anyways, going back to... and I'm just going to put a password on the room here real quick. All right, so going back to NOVN and SPU, these two are both on the watch list this morning. Both of them had news. So we'll look at SPU first. You can see this one here. So SPU was gapping up this morning. Let me just pull this back here. Those of you who are watching screen share can see what I'm doing. So SPU gapping up 20%. But on very light volume. And that was my concern that, yes, we had a good gap, but it was obviously light volume. So I said when the bell rings, I'll watch to see if volume comes into the name. And I'm not sure if we'll get it, but that's what I'm watching. Well, right on the first 5-minute candle, we did get a bit of a spike of volume from from a low of 565 up to a high of 645. So we kind of squeezed up out of the gates. We pulled back, and that right there, that pullback would have been a good 5-minute entry, and it was an entry that I missed. By the time I saw it, it was already spiking up here at 650. So I was like, all right, well, you know what? I'll jump in at 650. We're going to be breaking over the $0.50. This looks like a decent spot to get in. So I get in at 650. We pop up to a high of 688, at which on the daily chart, this stock, number one, is a former runner, history of making a big move. It's above the moving averages, which is, of course, what we look for. And it didn't have any nearby resistance. So I was thinking, above $7 starts to look good from 712 here up to 820. That was sort of a big window on the daily chart right in there. All right, so as we were popping up here to 88, that was the spot I had in my mind. We drop back down to 38. I'm still holding. We go back up to a high of 79. And at that point, I said, look, if this thing can't get back to the highs and it breaks down, I'm just going to bail out. I'm not going to hold it. And we ended up having a lot of sellers in that candle, and so I just sold it. With 5,000 shares, I made an average of 14 cents, but that wasn't the win that I was looking for. I wanted to take 5,000, double to 10,000 for the break of $7, and potentially get 50 cents or 60 cents with 10,000 shares. But I only got 14 cents with 5,000. So although it was a winner, it's not what I was looking for. The good news, obviously, is when trades that don't work out well still end up being winners. So this one, despite having a headline, despite being a former runner, it was just a little bit weak. And, it maybe not incredibly surprising given the fact that the last day we had a big move was also really shut down here, the high of 712 and then dropping back down. So it's been a little tricky to trade. Made some money on it, but not one of the best stocks ever. Now, NOVN, this one I was watching pretty closely because back on February 15th, and I'll show you guys who are on Facebook Live, back on February 15th, we had this candle where it squeezed up from a low of $4.79 all the way up to $8 right there. And you know what? I missed almost the entire move because I didn't want to get in on a 1-minute setup. I wanted to wait for a 5-minute pullback. And by the time it was pulling back on the 5-minute, it was already too extended. So what I remember about this stock was, number one, it's a former runner. Number two, it ran quickly without giving me an entry opportunity, without pulling back. And so when I saw it popping up today with a headline, I thought, yes, this is definitely one that I'm going to want to watch. But you can see here, my concern was the fact that pre-market, we had a pre-market high of 785, and then we pulled back. And I said, if the bell rings, I'll be watching it maybe long over $7. That was kind of what I said on my watch list. Well, the bell rang, and it popped up to 750, kind of like SPU. I waited for the volume to come in. It pops up to 750, and that's when I said, okay, it's showing me strength, and it's not going to leave me behind. Now, I would say on both SPU and NOVN, I did not wait for the 5-minute pullback. I didn't. I was impatient. I was a little bit impatient. Um, and I've started tracking on my trades whether or not I'm waiting for 5-minute pullbacks or I'm getting in, I'm just like jumping in, basically right off the scanner. Because I definitely do a little bit of both, depending on the quality of the setup, the stock that's hitting the scanner, and sort of a number of factors. And I'm trying to get a sense of where which method is more consistent, and which one gives me bigger wins, bigger losses, average profit loss ratio, accuracy, all of that stuff. Right now it's too early for me to tell, but on Friday I had a couple of really solid trades on RNVA based on the 5-minute time frame, and those were super solid, $4,000 profit. So I know that the 5-minute can be really strong, but in this case on NOVN, this thing ran completely without me the last time it went, and I missed it. So I didn't want that to happen again. So I jumped in here with 10,000 shares at 750. And I knew as I jumped in that my risk was going to be probably at least $3,000. I was going to be looking at a bigger loss if it didn't work. But the back of my mind target on this was that we would break over the high of this candle here, which was 798. That we would break over 798, and then we've got room all the way up to the red moving average here, the 50 moving average, which is 1168. Now, it's not to say that we would necessarily go that far in one day, but the fact that the stock didn't have resistance until that point, I mean, that's good. That's what we look for. That's a stock with a lot of potential. What surprised me today is that we didn't get the level of follow through that I expected. Really, not at all. I mean, yes, we went from 750 up to $8, and we pulled back here. Let's see, we went up to a high of 819. We pulled back down. I sold through the break of $8 and then continued to hold 2,000 shares. We popped back up to 815. We pulled back. I sold 2,000 shares, and then I kept 500 with a stop at break even, thinking that, all right, I'll let this consolidate, and then I'll wait for the opportunity to add on the 5-minute setup, and I'll keep this core position because that'll keep me focused, on the trade. And so I kept those 500 shares until I got stopped out at 744. So, it was a good-looking setup. It had potential, but it didn't get the follow-through. Neither did SPU. The one that I wasn't expecting to be so strong was TGTX. This one I didn't anticipate being so strong because it's a 5-cent tick pilot program stock. It was gapping up 80%, but I thought, well, 80% gap, 49 million share flow. It's almost $10 now. A million shares of pre-market volume. I don't think it's going to be clean. And so what really surprised me was how this one surged out of the gates, but really not that different in terms of its pattern from SPU or NOVN. Both of them very strong out of the gates and then rolling over. So this shows you the opportunity to capitalize on this pattern, a pattern that we see really day in and day out. Usually it's a pattern that we'll see in the top 10 gappers. So, the top 10 gapping stocks, these are the ones to watch. Narrow them down on which ones look like they have the most potential on the daily chart, no nearby resistance. And I just thought this one didn't have potential because of the 5-cent tick, because of the price, and because of the float. And in this case, I was wrong. There was short-term opportunity here for the first 4 or 5 minutes, but obviously, it rolled over out of the gates. Now, the second one that I underestimated was CNCE. CNCE. So this one, also not a bad pre-market flag. I mean, it really wasn't. That was a very strong pre-market flag, I would say. But my concern on this one was, well, the price is pretty high. It looks good, but I'm not sure. Usually I try to focus on under $10. Over $10, I'm not going to be able to take I could take 10,000 shares, but it would be a lot of risk. And the spreads are usually 20 cents, maybe even 30 cents, which means if I took 10,000 shares, I'd probably be risking 50 to 60 cents per share. I'm not willing to risk, $5,000 to $6,000. But what ended up happening is the bell rang, and this squeezed. First, it squeezed up to retest the pre-market high right here, which was 1366. So we came up to that level. We broke through 1366, 1379, and then we dropped back down. We popped back up to 14, and then from 14, we dropped all the way down to 1328. So this shows you this is kind of the challenge of trading these stocks right out of the gates. Now, if you look at the 5-minute chart, you'd be like, this was smooth sailing from 13 to 18. But then when you look at the 1 minute, you realize that it hit new highs, then it hit new lows, then it came back to the new highs. So it was actually choppy until it consolidated here for a few minutes around 1425. And then it started to open up a little bit more. And these 1 minute pullbacks, ended up being fairly good. The sort of first one at 1425, the second one at 15, and the third one at 17. But by the time I was seeing the third one at 17, I felt like it was too extended on the 1 minute to buy a 1 minute pullback, too extended on the 5 minute to buy. There was no 5 minute setup, and so I said, well, I'll just have to wait. So what I decided to do on this was wait for what I thought would be that ABCD setup, where we get A, pullback, B, a pop, C, a second pullback, and then D, a break over that level. And so that's why I got into this one let's see. I got into it at, let's see, what was the time? It was 11:50, right on this candle here. And I was thinking that it would break over the high of 1784, and we would go back to 18, and then over 18, we'd go back to high of day, 1850, make new highs, 19, maybe higher. And obviously, that's not what happened. We popped up and then we faded. Fortunately on this one though, even with 1,000 shares, I was able to manage my risk and I only lost $9. So 3 trades today, 2 winners, 1 loser, and the biggest loss, $9. I was risking about $200 on that trade. I was risking about 20 cents, and the profit target originally was 18 to 1850, but my plan was that I would add 1,000 shares around 18, maybe even 2,000, get myself up to 3 or maybe 4,000 shares once I had a full position, and try to ride that for 50 cents or maybe a point. So to risk 200 for the potential to make 1,000, 2,000 if it worked well is totally worth it. Now, just because I'm risking 200 doesn't mean I need to take that full loss. If I get in and the stock is telling me it's choppy or it's not following through, I'll just get right back out. And that's the breakout or bailout mentality. I get in, if it doesn't give me what I'm looking for, I just get out of the way. So losses will always be small. Now, for the most part, you can do that on any trade. The times where that can be tricky is when you have a big spread. So a stock like NOVN, where you've got a 20-cent spread, well, I'm not sure if it was as big as 20 cents, but when you know that you're going to have a bigger spread and you're going to have more slippage, it can be a little bit trickier to just get out quickly. And so that goes back to knowing that if you trade the best quality setups, those are the ones that are going to have the best resolution. Those are the ones where even if it doesn't work exactly the way you wanted it to, you can still usually get out right around break even or close to that. All right, so that pretty much wraps it up for today. I was looking at reversal trades after I hit my goal. Well, my goal is really $1,000 a day. So once I was up 5,000, I just sort of switched gears to looking for reversals. We had this nice reversal on GM, General Motors, which usually isn't a stock that I would day trade, but right here it was very extended to the downside, and you can see that bottoming tail doji with an entry right here at 37.30 and a move up to 37.53. So 20 cents profit versus 10 cents stop. I mean, that's your 2-to-1 profit loss ratio. It's not a bad trade. Takes a little bit more money. The potential is a little bit more limited, but you can scalp these types of setups off the bottom just using these reversal scanners. So you look for the reversal, first candle to make a new high, whether you're using the 1 minute or the 5 minute, or maybe combining both of them. That's a good opportunity to pick up some small gains. You can see here on cost, after this long down stretch here, over 66.60, popped right up to 67.04. So a nice 40-cent pop versus 10-cent stop, 4-to-1 profit loss ratio. That works pretty well. All right, so in any case, that's where we're finishing today, Monday, March 6th. So a nice green day, just under $5,700, and I'll open tomorrow on day 43 with $86,000. So closing in on that $100,000 goal, and I'll be excited, when I hit that mark. I expect it'll be as early as this week if I have some really good trading, but probably next week or the week after at the latest. I don't think it's going to take me all the way to the end of the month, but you never know. I mean, things may slow down a little bit, and if they do, then I'll just adjust. Try to taper my risk back a little bit until we get some cleaner trading. But today we had some good opportunities, so hopefully that's a sign of good things to come this week. All right, guys. So any questions for those of you watching on Facebook or YouTube? You can put those questions down in the comments section, and I'll come back around and answer them. Those of you who are in chat, I'll answer questions now. And also a reminder, guys, we have been nominated for the 2017 Benzinga FinTech Awards. We were nominated for the 2016. We're nominated again for the 2017 awards. And you can see right here over on Benzinga. So we would love to have you guys cast your vote, and I'll give you the link here where you can put in your vote. We'll be going to those awards in New York, and we're hoping to do well this year. All right. So if you guys enjoy these recaps, enjoy being part of the community, we'd love to have you vote and help us get our name on the board over there. Okay, those of you watching on Facebook, I can give you the link here, and those of you on YouTube, I'll post the link down in the comments. All right, so let's see. David, to answer your question, no, the bid and the ask don't determine new highs unless a print goes through. JQ, answer your question 100% there. Yeah, the print needs to go through, and that's the same with a stop order. So like I had a stop on NOVN at 750, but it dropped down to 744 on the bid. Now there was 744 on the bid, but there wasn't a print. So I had to wait for someone to actually press the sell button at 744 to trigger my stop order, and then the order went through at 44 and I think at 42. So, maybe a little annoying there. Just with stop orders that they're also going to wait for the stop or the price to trigger. So, Jacques, if the 5-cent tick becomes, and I'm just going to post this in, here's the link for voting on Facebook. All right, let's see, voting for Benzinga FinTech Awards. So if the 5-cent tick becomes, it gets accepted. Now, they'll be in early 2018 in the spring. There'll be a report on the findings, good or bad, and then I suppose in the fall, about a year from October, is when they would potentially move forward with either just ending the program or going live with it. If that happens, it will change the market. I mean, it will for sure. It'll change the market for small caps, and I think that traders will end up changing their focus to areas that are more volatile, because the small cap market, the ones that are currently affected by the 5-cent tick pilot program, are not as volatile right now, and they're just not as interesting for most traders, with a couple of exceptions. So I think that it'll change the market, and traders have to be adaptive people. I mean, we adapt on a daily basis to the markets, and it'll be no different with if that type of program was implemented across the whole market. It'd be interesting to see if that is implemented on OTC stocks. because if it is not, those will probably become very popular. If it is, then the switch will probably be to stocks with a 1 cent tick, a 1 cent spread, that are just a little bit more expensive. And those will become the new stock that all of the traders jump onto. And so you have to realize that the market is very much a result of collective trading mentality. Hundreds of thousands of traders all around the world forming long or short biases on these stocks. So, every trader is going to go to where the action is, and the action may change places, but I don't think it's going to have too much of an impact other than just having to reevaluate where there's action each day. Let's see. OTC executions. I haven't traded an OTC stock in years, so I don't know what the executions are like right now. I'm really not sure if they're if they're better than they used to be or if they're just as bad. Typically, they're not as good. So, Fonzie, after a pullback, what I'm looking for really is the first candle to make a new high. And I know that sounds pretty simple, but that's really what it is. So on a stock like RNVA, we'll go back to this one from Friday. This one was a little bit of a sharper pullback at first, so it wasn't. We got this kind of ABC setup because it pulled back so much, and actually, got to be on the 1 minute. We got it on the 5 minute as well. So typically, well, let's say right here, you have a stock that just moved up quickly. It pulls back. You get two red candles. First candle to make the new high is the entry point, and that's where I got in right there for the break over $3. So that's the spot that traders will look at. After you get a second and a third pullback that don't work as well, traders kind of move on and look at the next stock. On CNCE, this one didn't really give us a clean pullback. By the time we got it, it was already super extended, so it didn't end up working. But generally, I like to see a pullback above the moving average, holding the moving average as support, and then either consolidating there or the first candle to make a new high and going right back to high a day. Slippage is something that I think we all deal with to a certain extent, especially on stocks that are really fast moving, like ONC or CNCE and even SPU and NOVN are going to have more slippage. A couple things you can do. Number one, I try to sell on the ask whenever I can, so I'm selling to a buyer. That's going to reduce slippage because I'm getting out at the best price. When I get in, I do face slippage because I'm buying on the ask, and sometimes the slippage is bad. I mean, sometimes I get 25 cents of slippage on my orders, but by using a limit order, I'm limiting how much I can allow. And sometimes the problem is that if I keep pressing Control or Shift 1 to buy 1,000 shares or 2,500, it's going to keep putting the order 5 cents above the current price. So I'll keep getting slippage as the stock moves up. And I have to be a little careful about that hotkey because it's definitely gotten me into some trades at really high prices, which is for sure, not a good thing. But, at the same time, that's just sort of part of the deal with trading. So you will get slippage on some trades, but you do the best you can to keep tight stops and that sort of thing. Let's see. I don't buy pre-market. No pre-market trades. Almost never. I mean, a couple times maybe in the last year, but very, very rarely. And Scott, I don't use a market order when I bail out. I use a limit order, and I sell on the bid. So right at the bid price. I don't trade pre-market because, number one, there's usually not enough liquidity. I've just always not felt as good trading pre-market. I would just rather wait for the bell to ring. It's more volume. All right, guys. So I think that'll just about do it for today, and we will jump back in first thing tomorrow morning for day 43, and hopefully we've got some good stocks on the gap scanner that we can look at in the morning. All right, guys, I'll see you first thing tomorrow.
Let's be honest. If you made it this far, you must have really enjoyed that video. So what's stopping you? Subscribe right here and get email alerts anytime I upload new content. Until then, happy surfing